Lights of festivities sparkle across the country. We are celebrating a quarter century of somewhat's here at CNBC TV 18 as we turn 25. Here's wishing everyone a very happy Diwali.
Indeed, a happy Diwali to all of our viewers, and what a prosperous Samvat it's been. A 30% rise for the Nifty alone, with SIP inflows at record highs. But just as we take a break from our hectic routines this festive season and the festivities give us a moment to pause and reflect, it seems like the markets too are shifting into a slightly lower gear. Maybe some reflection there as well.
Looks like it. I mean, the question is this just a speed bump, a slowdown, or maybe even a chance to step in? After a long euphoric run, questions are emerging. Before we bring in our star-studded Samvat Baitak to answer and debate all of these questions, let me quickly set things up, putting some points on the table. First up, while starting valuations have been pretty high for markets, we've been seeing earnings downgrades come through across the board. The MSCI India index is currently trading at about 24 times one-year forward earnings. That's at a level we've seen only twice in the recent history, back in 2007 and once again in 2021. Both times the markets were riding high, but we all remember how corrections followed. Relative to other markets as well in the region, in Asia Pacific, the MSCI India is also running at a significant premium. The current price to earnings ratio premium is at 70%. Relatively speaking, a steep jump from the 5-year average, which is about 55%. This is some investors wondering if the market's recent exuberance has gone a little too far, too fast. We've also had a weak Q1 and an ongoing weak Q2 as well, and analysts are asking if H2 recovery will materialize. A lot depends on this festive season. Let's get to flows now. Domestic mutual funds have been stepping in to prop up the markets. They've bought nearly $10 billion month to date, effectively countering the $10 billion in FII selling we've seen. Now, starting cash balances at mutual funds were between $16 to $18 billion. Add to that the monthly inflows that we're getting, which is about $4 billion into equity mutual fund schemes. But with a massive IPO pipeline, QIP pipeline, which is expected, which is lined up, the question many are asking is, if the FI selling continues, will mutual funds start to run out of dry powder soon? And of course, we can't ignore the bigger global picture, the outcome of the upcoming US elections, combined with the impact of ongoing global conflicts. It's still unknown, but these are uncertainties which are looming. There are also some questions being raised by investing veterans in the US about how certain should we be that markets and the Fed's big interest rate cutting cycle will indeed materialize.
So, well, there you heard it. Lots and lots of talking points, plenty of questions, and enough to debate and discuss. So, let me now welcome Mr. Raamdeo Agrawal as well as Mr. Navneet Munot on the stage. They need no introduction. Market veterans have seen many, many cycles and many, many Diwalis. Please, if you could join us on the stage.
Welcome to this stage, welcome to the program. We've done many Samvats together, and as I said, this is a special one for us because 25 Samvats. So it's been a long journey as CNBC celebrates 25 years as well. Great to have both of you here. So, I mean, I think we put on the table a lot of questions really about what we're seeing. Is this finally the correction that everybody was saying is not coming? Are we finally seeing it? Navneet, you go first.
No, first of all, many congratulations to you on 25 wonderful years. I think India has come a long way, and you guys have contributed to that journey of India, to the journey of capital markets and the wealth creation, phenomenal wealth creation that has happened in last 25 years in our career. I always say that there is this book of Malcolm Gladwell, Outliers, where people born in a certain part of the year, they do well in life because there is some big change happening. I always say that people like us who got so lucky, who joined the market in early 90s, have done so well. If you had integrity and was working hard, you've done so well. But the next 25 years look even better. Notwithstanding this correction, and we can discuss more about it, I don't think that the last few days give you any reason to worry about the next 25 years. This was expected. This is a healthy correction. I think there was a point where the momentum had taken over, where people were not discriminating between a good news or a bad news. The stocks had to go up every day. But this cannot continue. Trees don't grow to sky. Trees don't grow to sky. And I think some bit of correction is very, very healthy. And I think there is a bit of sanity check. And I think from here on, maybe a little bit more time correction plus some price correction, things will start looking good again.
Raamdeo ji, what's
Yeah,
your thought?
congratulations on 25th year of CNBC, and I have seen it all. In the sense, I think I've been coming for 25 years here, and you guys kept patience with all the fools like us, and actually made us grow. I mean, the contribution of CNBC for the capital market growth, even Motilal Oswal's growth or our brand equity growth has been immense. So thank you very much for that. Coming back to your question about correction, it is the healthiest possible correction and overdue correction, I would say. And even if a bit more, in fact, it'll be deeper the correction, better it is for the people, because the expectations were going wild. You know, some people are saying that I want only 2-3% monthly return, month on month, that too compounded. So, you know, that expectation was running wild, and once the expectations are way beyond, see, ultimately, even last 5-year return is just about 16% of the Nifty.
Correct. Your
1-year return could be whatever, how so exciting it is, but 5-year is just about 6.5%. 10-year is just about 14%, 25 years 15%, 40 years 15%. So that's the base rate of India. So anchoring the expectation, and you just see today it's a different market. Out of 175-80 million people, only 30-35 are the people with more than 5 years experience. Otherwise, all of them are seeing market for the first time.
Exactly.
So I don't know how they behave, and for them to set wrong expectation and get disappointed in a very early stage, I think that would not be very good.
They say it's always better to lose money when you start. So then you're a little bit more cautious. I mean, and not be in euphoric times, because then you expect euphoria all through the investing
So you
journey.
can come simultaneously. I mean, like 1 lakh crore, 2 lakh crore can flow in simultaneously. But if they get disappointed for a prolonged period, then they can also exit simultaneously. And that can destroy the market.
Let's ask the person who's part of the industry that's emerged sort of supreme, right? In the last, I think, 5-7 years, what Indian mutual funds have done, how they've evolved and how they've led the market is the amazing story. So Navneet, that's the $10 billion question right now, right? And will that inflow keep coming in and offsetting all the FPI selling? You know, what does anecdotal data, ground checks and your gut tell you?
So we're lucky to be called market movers, but the real market movers are the retail investors of India. The resilience that they have shown, the maturity that they have shown is really credible. And of course, you guys have played a role in handholding them through the ups and downs. But I think we have come a long way as an industry. 25 years back, when you guys started, maybe the total industry size would have been 1 lakh crore. Today, we're talking about 67, 68 lakh crores. What a journey that the industry has seen. We have added more AUM in last 1.5 years than what the total AUM we had 10 years back. That's the pace at which the money is coming. And the best part is a large part of that money is coming in the form of SIPs. And the 24,500 crores is ticket size is 23 or 400 rupees per month per ticket. And that makes us very positive about the structural aspect of financialization of savings in India. I'll just give you 2 data points. 24,500 crores into 12 is almost $35 billion. I don't remember in last 25 years when you started, was there any year where foreigners invested more than that? No. Just see the power of this money. Yep. Number 2 is, as an industry, we are almost $800 billion. And Raamdeo ji has been meeting, we have been meeting global investors all our career. I think this was the size of US asset management industry in late 80s, sometime in 87, 88. In the next 10 years, from 88 to 98, they grew from almost $800 billion to $5 trillion. So you know where we are headed. I call this the India's 401k movement. The difference is, without a tax incentive, without a large fiscal incentive, I think it's a voluntary, on a voluntary basis, individual investors saving every month on a disciplined basis for their retirement nest. This is one of the biggest revolution that has happened, and I feel very positive about India on the sustainability of this.
You know, it's uncanny, Navneet, that you're making that statement sitting exactly at the same place. I think it was about 6 months back, same place and same forum. We had Chris Wood sitting on that chair where you're sitting today, and he made this exact same reference point saying, the way the US market went, that 401k moment over the next 2-3 decades, and
absolutely.
India is, starting on that curve. So that's amazing. I mean, both the views, of course, sort of coming together there. But Raamdeo
Maybe
ji,
many countries in next 20, 30, 40 years who will say we are exactly where India was in 2000.
where the US,
No,
okay, where India was,
in
okay.
2000.
Let me just finish that point. Very near, again, forgive me, but very near term, if I have to ask you. I mean, that point that I made, $4 billion is coming into equity mutual funds.
Little more than that.
Little more than that. I mean, depending
last
on
3 months, the gross inflows have been almost 1 lakh crore per month.
Right.
The net retention, if you include the equity funds and hybrid funds put together, plus the equity index fund, would be almost 50,000 crores a month.
Okay. So my question is this. So there is that money which is coming in. There's a starting cash balance, which is, as I said, about between 16 and 18 billion dollars. But FIRs are selling. They sold about 10, 11 billion dollars already. What about dry powder with mutual funds? I mean, local money has supported even as FIs are exiting. We don't know what they will do, and we will talk about that, what is triggering this and whether we are done with the bulk of outflows. Just the dry powder, if this continues, will we at some point...
There used to be a time when we see this kind of volatility or a market fall, we had to travel and tell people that please keep patience, don't worry, markets would come back. Today it's other way around. When I look at the purchase transactions, on the days when you see a correction of 1.5%, 2% or so, very few sessions in last few weeks, I see a substantial increase in the purchase transactions.
And I think Raamdeo ji also...
This is the maturity which is very, very different. People want to top up their SIPs on those days. There will be some cyclical aspect. There will be like maybe if markets don't do well for few months, there will be few people may take some money off the table or may probably wait for some time to put additional money to work. But the structural trend is very much intact.
Raamdeo ji, just to complete that point, would we run into trouble if this continues, if selling continues? We hope it does not.
No. If the pace continues the way they are doing it, like close to $500 million per day, because bulk of, see, in the last 20 days, we have exhausted quite a bit of the reserve.
Mutual fund cash
reserve. My sense is maybe 60-70% is already deployed, because correspondingly as much is being bought despite that's why market fall is very, very regulated, I would say. So as your reserve comes down, now if their adjustment is not complete, see, other thing is that adjustment is also not unlimited. They are selling primarily for adjustment. The guys who are underweight China and overweight India, they are trying to balance that thing and they are going back to China, whatever is the neutral weight, and coming back to India also in neutral weight. So that's earlier estimate was about 15 billion max. So we have done about 11, 12, maybe another 2-3 to go at best. So I don't think there is much of selling left. But then it's anybody's
on
call.
account of China.
On account of China. Then comes our own. So there is a daily flow. That flow I don't think is still impacted. And there must be some guys who are deeper into cash. They would still be there. So I don't think there is any crisis kind of situation right now.